Hey guys, Ken Boyd with the Accounting Accidentally website, where you'll find over 400 blog posts and 350 links to my YouTube videos. Unfortunately, I wanted to talk about a big issue that came up. I'm going to close out of this. Disney is laying off 28,000 employees due to the pandemic, hammering the theme parks. Now, if you scroll down, what you'll see is that they're laying off 28,000 people, very sad, at the Disney Parks Experience and Products unit. Now that's important because if I flip over to PowerPoint, if you look at the annual report for Disney, they actually have 4 business segments. Media networks, they own ESPN, a number of other cable companies, the parks and experience products that I just talked about, studio entertainment, we all know Disney for the movies, and direct-to-consumer and international. So what's suffering, and the reason for these layoffs, is only one of the 4 business segments. Which brings us to a discussion of looking at a business based on business segments. This is an old spreadsheet I've used for years. And what we have here is we have 4 different business segments: sales, variable costs, and contribution margin. One of the basic terms in accounting, sales less variable costs, is contribution margin. I've always said that contribution margin goes toward one of 2 things. It covers your fixed costs, and anything that's left over is operating income. So in the System A product line, if we take contribution margin less fixed costs in red, we have operating income left over. So you'll see here that each segment has different variable costs, each segment has different fixed costs, and generates different operating income. For example, System B has the highest, one of the 2 highest variable costs, and generates loss. In total, however, the company generates $48,700 in variable costs, but company-wide generates a profit. So, just like the Disney example, you can have a situation where a company division is running a loss, but in total, you can run a profit. Another thing that's good about using segmented income statements is total fixed costs in note 1 here include common costs. Common costs are fixed costs allocated to each product in proportion to total revenue. That's a common way to allocate fixed costs that are shared between, in this case, 3 units. So I'm saying in my example that the fixed cost is $18,000. Here it is in the total column. And the question is, how do we assign common fixed costs? We do it by total revenue. So System A has $45,000 of the $85,500 in total revenue. That's 53%. So they get 53% of the $18,000 in common costs. Each department gets their allocation, and that adds up to 100%. Here are the allocations down here. And then I have a line down here that says fixed costs only for product lines. So let's see what that is. Well, if you take fixed costs in total for System A and you subtract out what was allocated, what we find out is that only $526 was a direct fixed cost that System A incurred directly. The vast majority of what they incurred was the allocation. If we look over here, System B, $18,000 total in fixed costs, a much smaller percentage in red, about $6,800 was common costs. So System B had a lot more money in direct fixed costs than System A did. So what's important to remember here is that you're going to have fixed costs that are common, that is, shared by different divisions. You've got to find a fair way to allocate those costs. There's a lot of arguments over this because, obviously, the more costs you allocate, the more you hurt the profit or loss of one particular division. This one uses total revenue, and you'll see huge differences in the amount of common costs and the amount of fixed costs between divisions. If you're working in a corporate job and you work in budgeting in particular, you'll see arguments over how fixed costs get assigned. A segmented income statement is a great way to do it. Another thing I wanted to talk about in Accounting Accidentally is, if you look at the home page under Get It Now or on the drop down here, you can get, at this point, 22 spreadsheets that help you understand accounting. It's the spreadsheets I use in the YouTube videos. This is a current list of the ones you get. You get a link to the video in the spreadsheet itself, and all you need to do to get it is email me. I'll send you a link from Hightail, one of my cloud backup systems, and you can download all the spreadsheets at once or one at a time. Thanks very much for watching, and we'll see you next time.